issuance for your second tranche. I know you are almost halfway through the medium-term notes. That's 10 billion, so you're already at 4.3 billion. I would like to know, especially with the performance we saw 3 times oversubscribed, I mean over 300% subscription rate reached. I'd like to know the timings for future tranches, especially noting that currently, as it is, the market has been quite vibrant. We know where interest rates sit. I'd like to know the thinking around what's left of your medium-term notes. And then the second one, we know there was an issue on the tax treatment. I mean, you're issuing a sustainability instrument. Maybe we expected some tax concessions there to make it tax-free. What perhaps type of conversation did you have with KRA? Perhaps why did we end up still seeing some withholding tax on that? Thank you. My name is Kshs, the NCBA Group.
Thank you, Stefan. So this is, I think, the second tranche of our bond program. The key thing is market timing. And we came to the market this time because we thought it's the right time. And indeed, it's actually the right time. Now, remember, we had put this into tranches. We had planned for 3 tranches, maximum 4. And this is our second one. We ought to have come to the market in 2024 or 2025. But of course, the macros were not good. So to cut the long chase, the third tranche is actually coming after next year in 2028. But it's also obviously subject to market conditions because our circumstances are very clear to us. It is about affordability, and therefore we are very sensitive on the cost. On your second question, it is a green bond. It qualifies as a green bond because, of course, the approval granted by the regulator, the CMA, falls within the framework of a green bond. The only thing that we had to confirm was, for avoidance of doubt, we thought we needed KRA to confirm. But as far as the law is concerned, both from the regulatory perspective and even the tax laws, it actually qualifies for tax exemption. When you look at the information memorandum, particularly the pricing supplement, it stated that it actually a tax exempt, but we had to confirm from the KRA that actually their understanding as well. So it is still considered tax exempt.
Jimmy? Good morning to investors, and also talk to us about the pricing of the second tranche.
No, thank you. Good morning, everyone. As you heard, this bond has been 3 times oversubscribed. And had we extended time, would have been many times oversubscribed. As per my earlier remarks, I mean, it all depends on the strength of the issuer, that they're well liked by this market. Of course, the structure, the tax-exempt nature of it was very attractive. In terms of who the investors were, we've seen a wide range. I mean, this market is typically driven by institutional investors, for sure. But as you heard, the banks came in very strongly. Typically, banks don't participate in corporate issuances the way that I have seen them come through for this particular issuance. And I think, again, it's speaking to the strength of the issuer and the structure of the bond. We saw a lot from institutional investors outside the banking system. Retail investors also participated, but not as much. Retail investors tend to go more into the treasuries than they do on the corporate bonds, but we saw a bit of interest. So it's been well received, really well received in the market. The sustainability nature of it also made it very attractive to non-traditional investors as well. Again, we saw some interest from the SACCOs, the NGOs and others who want sustainability instruments as well.
Yeah. Any other, Eric?
Another question to John. My name is Eric from Bloomberg. On your target of 30 billion shillings for green financing, how much have you been able to mobilize so far as NCBA?
Well, I think today's day is for KMRC, yeah? And so let's keep it that way. But I think this work that we did obviously supports that ambition of mobilizing that billion. I think we announced we had already done 5 billion from Proparco. This also counts as part of that work that we have done, and a few other areas that I mean, tomorrow we'll be unveiling some work that we're doing on the EV area, electric vehicle area, We'll be unveiling that as well. So I think there is quite a bit of work that we have already done. But today, let's keep it the KMRC Day here at the NSE. Thank you.
There's a hand at the back. Please introduce yourself.
My name is Kelly from KTN. Perhaps because it's about KMRC.
Yeah.
What made that paper attractive for you? And for KMRC, for the bond, for the 3 billion bond, how are you going to distribute it between green housing and social, maybe affordable housing?
Let's start with Jayo.
Yeah.
So we know, we have a framework, the Sustainable Finance Framework, that actually guides the utilization of funds. So of course, it's a sustainability bond, and that cuts into green as well as the social. Now, at least 30% of what we are raising goes into green, and the difference, of course, is part of the social that we are covering. And the social we are talking about here is actually supporting people at the lower end who are disproportionately affected. They never necessarily get mortgages when they need, because of course they are considered higher risk by financial institutions. But the blending nature of this transaction helps to push financing down to make it a lot more affordable. So, but it's very, very clear in the Sustainable Finance Framework on how the funds are going to be utilized. We actually have a reporting framework, which also includes a second-party opinion, which we already received from an institution in the US called ISS Corporate, and who are also going to be looking, when we finally disburse all the funds, to check to the extent that we have actually utilized funds based on the Sustainable Finance Framework that we have. And we have a number of other parties, of course, who will be keen to follow on the transaction, not least the regulator, both the CMA as well as the central bank. And of course, we have a commitment as KMRC to ensure that the funds we've raised are utilized in accordance with the framework that we have put in place.
John, there was a question for you.
Yeah, I think the question was, why was this attractive to us both as an investor and I suppose answering for the investors, on behalf of investors? I would say 3 reasons. One was obviously the issuer, right? I've talked about that very much, that the strength of any issuance depends on the issuer, first of all. Number 2 was the structure. I mean, real good, attractive features of this issuance, sustainability finance. Number 2, the tax exception was quite well. I think the pricing matches the issuer was pushing us quite a bit. I think it was a decent pricing. But I think the third and most important was the purpose. Remember, this is about affordability housing. This is about Wajiko. This is about placing Wajiko in a house, right? The reason we invested first as shareholders in KMRC was to support that purpose. And this money that goes towards that purpose, as I said, is traceable, is accountable. We can see where it's going. We can trace it to our uncles, our sisters, our brothers. We're going to be put in affordable housing. So that was important for us. The purpose of this issuance, not just to make people rich, is to put Wanjikos in housing. Thank you.
One last question before we close, or 2? Okay, let me go Kefa first, then Jim.
Thanks. My question is to Mr. Frank Mwiti. I believe this is probably my 10th time at the exchange over the past year, and perhaps like Mbadi might need an office too, but if I get there. If you would speak to the vibrance we've been seeing, the factors driving that, and I'm really interested in the outlook in terms of, macro picture is always changing, and there's a bit concern on whether interest rates turn and move the higher side. If you would comment on the vibrance and perhaps your outlook with a bit of a bumpy road we are seeing ahead.
Thanks, Kefa, and okay. Thanks, Kefa, and congratulations again to KMRC. Before I respond to your question, is just to mention that last year, when we set up the Sustainable Finance Center of Excellence at the NSE, what we were quite clear on is there is funding that is looking to go into sustainability-linked projects and instruments. And so this is actually one of the testaments that funding is available as long as the products that come to market are well structured. And to John's point, we have a quality issuer that's bringing those instruments to market. The vibrancy of our market and whether you will have an office upstairs, Kefa, is first you earn the office. But I think credit is due to government because you can't have a vibrant capital markets if the macroeconomic environment is all over the place. I think we've had stable inflation, interest rates are looking good, our foreign reserves are okay, the shilling is behaving quite well. I think that is the bedrock on which we've built the exchange and brought back the vitality that you see now. Of course, we have a new strategy that was approved by the board in November last year. We've finished 2025 as the first year of that strategy. The results, we had our AGM last week actually, results are phenomenal. We've seen more retail investors participating in our market. We are making it easier, potentially cheaper to come to our market. We are also working very closely with the listed companies as well as other issuers so that they have quality investor relations to interface with the market. So all those things are contributing to the vitality we are seeing. But yes, we are not operating in a vacuum. So when the macroeconomic environment as well as some of the geopolitical issues come to fore, example is the fallout in Middle East. Of course, that has implications on how our market performs. The beauty is we pivoted away from over-reliance on foreign investors. So now we have a good balance between foreign investors and local investors, as well as institutional and retail. So what we find is even when there's volatility beyond our borders, the domestic investors tend to, fill the gap or, double down. How do I see things going forward? I think we're only observing two things because I think we have the right strategy. It's working. We are happy. We have the likes of KMRC coming to market. But there are two things we are, of course, keeping an eye on. How the global environment is changing. I think that is impacting everybody, including here. Number two, of course, as a country, we're heading to elections next year. So how that journey unfolds will also have implications on other factors that then impact our capital markets. But the key point is we have more investors in our market. We have more engagement with the markets. And of course, we are driving other programs like financial literacy programs, etc. I think you will see KMRC coming to the market hopefully before 2028 because the market is very good. Thank you.
Final question, Jimmy.
Actually, it's very interesting because it's sort of similar to what Kev was asking Frank, which is, Frank, you've had a really busy first half of the year, give or take. I mean, it's just a few weeks to the first half of the year. And you've seen a lot of activities in the market. In terms of that fundamental shift, what would you say has happened in the economy that is making the market, again, very attractive and very active? But also, I'd really want you to make a case to retail investors. Why should they invest in corporate bonds?
Right. It's a very compound question. So let me see if I can touch on it. I'm looking at John because John is listed on my chain, so maybe he knows better than this. But I think I won't belabor the point about stable macroeconomic environment as the foundation for revitalizing the market. But if I go back to retail investors, truth be told, in the past we haven't had substantive participation, direct participation by retail investors. So what have we done? Other than coming up with a strategy that speaks to everyone, there are changes we've had to do in our market. Good example, last year in the 70-year history of the exchange, we changed our rules to enable single share trading. So that instead of the previous position where you had to buy at a minimum 100 shares of any given counter, now you can buy one share. That has enabled my mom in my village to access the market without having to have a lot of money. Number two, of course, we also worked closely with the Safaricom and Kshs Capital to enable ZD Trader to come to market. That has also contributed to retail participation. In fact, 60% by volume of all transactions happening in our market today are coming through the ZD Trader platform. Now, granted, the values are smaller. It's about 2,000 shillings per ticket. But it tells you that there's a big portion of our population that would not access our market, that now they can do that. They don't need to fill forms. They don't need to go to anyone's office. They just start on their phone. And the number 3 has been the road shows we've been doing. We've been doing quite a lot of road shows. In fact, I think it's a colleague today that is speaking on one of the vernacular radio stations. I'm supposed to be speaking on the Meru radio station, so I'm trying to figure out what dividends and shareholders are in my local language. But since last year, we've started engaging through vernacular stations. Why? We want to go to the people, take the market to the people, meet them at that level, take questions, and use that as feedback to improve our market. Lastly, of course, has been what I talked about, bringing more visibility when we have issuances like this, so that people are more aware. You know, you saw a pile-in, for example, in money market funds in the previous past. That was down to investor awareness. So we are doing the same, that there's opportunity both on the share side, but it's also opportunity on the fixed income, corporate bonds, green bonds, things like this. The issuance that was done last year by East African Breweries and Safaricom, the 2 bonds, were also equally open to retail investors who also participated. So I think there's a trend there. I do agree with John that still it's primarily institutional players that are coming into the fixed income space. But I think as more awareness comes through, as we work closely with issuers like KMRC, then that awareness improves, and then participation by retail investors will also follow through, including diaspora, who are also particularly keen on instruments like this. Thank you.
Asante sana, friends, we have to close it.